Good afternoon. What's up, Martin, Tanush, Wade, Micah, Chris, Tanae, Thad, Christine, F, Liam, Ali, Julian, Aaron, Julio, Brian, Tamlin, Josh. Sup? Mr. Josh had his biggest trade ever today on the desk. Everyone say congratulations, Josh, in the chat. Let him know. Let's see, Josh, what were you in? It was obviously crude oil. Let me give the people some prices. You were in oh, I was on the wrong tab. Entry price 102.36. Exit price 161. 102.36 down to 161. 161, Josh. You could do better than that. Low of days 99. There's work to be done. That's terrible. All right. So welcome everybody. My name's Merritt. I head up Apteros prop trading desk. We also have education. We have a tryout to get onto our desk. I keep smelling smoke. I keep wondering if my house is on fire. I don't think it is. Today is all about you guys. Today is community mentoring day, right? Used to be Futures Fridays for years. We moved it to Tuesdays because I think a lot of people, myself included, have some travel on Fridays and things like that. So Tuesdays is easier for us to all get together. And based on attendance to these things doubling, I think that was the right move. So here's the ground rules. Use the chat just like we have been, comments, feedback, banter, whatever. But today's a Q&A, right? It's how can I help you guys with what's going on in your trading? Please click the Q&A button on the Zoom window and submit your questions in the Q&A box. We almost never get to all of them, so try to get them in there. Hopefully, if you start coming to this meeting regularly, kind of have in mind maybe, like, heck, use your trading journal throughout the week. Say, you know what? I want to ask Merritt about that. Jot it down and then come to this meeting kind of prepared with questions. So Tanae, we'll answer his first here. Could you walk through some of your analysis related to 3906 ES target, please? It's just traversing some bigger picture value areas, right? So for me, it's just, big picture, the S&P, let's call it a value area, right? Just like we might use. To me, the S&P is headed towards that, general, let's just call it 3,900 here. That spot would be a nice destination because according to one of our laws of market dynamics, and it's no secret, once you're holding inside, and we use terms to determine what holding means for us, but anyways, any type of area, basic support resistance, or in our case, value, you tend to traverse that value. So that would be just simply a value traversal on a higher time frame. That's what I'm looking at. What are we saying? Nice, Tanush? I was just curious. I'm not seeing this. Oh, I may have beaten you on entry exit. Nice. I expect Tanush to be on our desk. I really do. Tanush he's a stud. He's got it together. Trading very, very well. We simplified his trade management, and it just was like, boom, big difference in results. Focus on narrative, simplify trade management. Jamie says only 5% or less make it to your prop desk. Probably. Someone asked me about this the other day. I don't have the numbers in front of me. I haven't even glanced at or made a spreadsheet. I'd have to get all of our tryout data and whatnot and import it and take a look at how many people have passed and all this kind of stuff. And quite frankly, I just haven't done that. I did it years ago. I can tell you that that's probably about right in terms of non-students. So any just random person who enters the Apteros tryout, I would guess, don't hold me to it, I would guess they have single digit, again, averaging everyone, right? You may be very special. You could come in as a random person and pass it. But as a whole, I bet it's single digit pass rate. I bet. But students, that is very different. And that is many multiples higher. Last I checked, again, years ago, of student pass rate in the tryout versus non-student pass rate is extremely different. But yeah, I mean, that's the way it is. There's no way around it. No matter how much you want to be in the 5%, and forget Apteros, forget our desk, just in general, let's talk about consistently profitable, successful trading by any standards. Yeah, it's going to be 5% or less for sure. There's no barrier to entry. Any idiot can open up an account and start trading and call themselves a trader and put in their LinkedIn bio that they're an aspiring trader. It's a little bit sad. But the type of stuff that I work with people on, like, for example, I just finished up an advanced group mentoring class, and we spent the session talking about TraderView, right? And again, just like I told them, we get no kickbacks or anything from TraderView. We just have a relationship with them and like their product and use it for our desk and for our tryout folks. So, I get nothing for saying this. So just so you know where I'm coming from. But we spent going through that tool and analytics and statistics and how to really dive into that and tagging your trades and all the work outside of just clicking the buttons and calling yourself a trader and putting risk on. There's so much work that's involved if you want to even give yourself just a remote chance of getting into the remote 5%, right? So hard, guys. But everybody wants to just think that they're special. Well, I'm not the 95%, but guess what? A lot of people are. Maybe not. Maybe the averages are different in this group, right? Especially if you're part of our community that's showing tremendous investment into your own trading, studying, collaboration, hard work. Even just the people who are probably here on this call there's not a lot of people here talking about, like, I don't know, I don't mean to step on any toes, but like stupid, you guys know how FinTwit is, like, maybe it's the NFT crowd or the crap coin crowd or whatever, right? Like, that doesn't happen in our community. Our community is for the people who maybe go through some of that stuff and then figure out, what, or a Robin Hood trader or whatever, right? Who figure out, what, I want to take this more seriously. I actually want to, and understand that it's going to be a hard, long journey, not some easy thing. And that's kind of the people that we attract, because we don't put out a bunch of rat poison out there. Yeah, Jamie, our trial is harder, and we're not ashamed of that. We feel that if we were running a tryout business, then we would make it easier and probably less expensive to draw in more people, right? But I'm not running a tryout business. I don't give a crap about that. We have to charge for the tryout. You have to feel pain. You have to feel that it's, you have to reset if you screw up. Like, those things have to be there in order to create an environment where people actually care about the tryout. And they don't just come in for nothing and flip a coin every day, right? So it has to be that way. People want to complain about us, perhaps, and I won't get on this soapbox, but for having a tryout and being one of those unscrupulous firms, let's call it, screw you, because I chose to do that based on my roots of not having any access to like the financial world or markets or any parents involved with that or uncles involved with that or nobody that I knew that did any of that. And I didn't go to a top tier school and all these things. And I don't want to judge anyone based on their resume and who their dad is or whatever, right? This isn't Wall Street. This is prop. This is like pure capitalism. So I don't care who you are, right? If you can't afford $300 a month for the tryout, then you really probably shouldn't be in a point in life where you're focused on trading. You should be focused on something else, most likely. Trust me, I've been there where I didn't have that money and I still focused on trading. So I can't really fault people for grinding like that. I waited tables and saved up little bits of money to trade and all kinds of things. So, anyways, for me, it's a privilege. It's an honor. It's the absolute best way that I want to have a HR hiring process through the tryout. So anyways, let's get back to your questions. What are your rules or guidelines, asked Duca, for merging consecutive market profiles? I've seen your YouTube live sessions. You made some 4 or 5 days composites, even when the separate value areas didn't have significant overlap. Well, I mean, what am I sharing? Is it the market profile, like the DMI chart? I was going to draw. I didn't know what I'm sharing. Okay, cool. So sometimes you may have a value area, right? And then the next day might be something like this, right? Where those value areas are not really overlapping, right? There's space between them. But then like days 4 comes in and days 5 comes in. And overall, this market really hasn't gone anywhere for 4 or 5 days, right? That is a consideration for a merge. Oh, weird. Okay, let me use the Zoom. Sorry about that. Thanks for letting me know. I forget this drawing tool only works when I'm sharing like an entire monitor. So let's use Zoom. All right, so real quickly, you got a day and then you got with value, right? And you got a day that's lower value. So there's space between these values. We wouldn't merge them, right? But then maybe you have another day and it's like, maybe this is just a 2-day or something. We're not really sure about merging with this guy. And then you have the 4th day and the 5th day, right? Well, guess what? This market hasn't gone anywhere. It's a candidate for merging all those sessions and taking a look at what that structure looks like. And if it's a pretty good single distribution, when you do that, it's a quality distribution to monitor the value of, because there's balance in that market. Anonymous attendees, which I always hate when people are anonymous. Do you ever look at market internals like tick before entering or managing a trade? I've gone through phases in my trading where I've been, a predominant S&P trader, like as a focus. And I have brought up, all kinds of market internals, including the tick. And I have picked the brains of people who really lean on that stuff. I think there's incremental edge in it when you master those tools. But for someone like me, who these days tends to focus on a lot of markets rather than just US indices, man, my read on order flow and stuff, it a lot of times is the same as the internals. It's more common that they're the same than kind of divergent. So it just becomes a little too repetitive, a little too tedious for my workflows and what I'm doing. And I already have enough edge, if you will, with my narrative reads and intraday tools and order flow, as I mentioned, that I just don't have to use it. I just don't have to use it. So it's been something that's not stuck as a part of what I do. But I think that it's perfectly fine. I'm all about anything you can do looking inside of a bar, looking inside of a rotation as to what the engine behind that is, right? That's order flow, that's internals. So those are things that I'm a fan of. I'm going to skip the second anonymous question because it's probably the same person. Well, I don't know if I'll answer this or not. I don't typically give away all my references and tools and tricks of the trade on these calls, Mike. But he says, how did you develop the bear zone for today? I had the higher 90 to 100 level due to the CVA, but not the bear zone. I'm in NADRO week 2 for context. So there you go, Mike. You're a student. So this is a perfect opportunity to use our community, right? Not this webinar necessarily for this particular question. But if you ever don't understand a single line or reference or bias or anything on my DMIs, we have a section in the community where you can ask that question, brainstorm with other people, tag me, bring me in on it if need be. Typically, you're going to have guys like Tanush or whoever that understand it and say, hey, this is what it's from. And so anyways, we like to keep that more internal than on public facing webinars like this. Sasakanth says, hey, Merritt, could you give me an idea of how you re-enter your trades? I seem to have difficulty with this. Does your 3 strikes per idea shape how you re-enter, or is it something else? Yeah, sorry, Mike. Thanks for understanding. Yeah, I mean, I think a good example is the, let's look at the post I made on Twitter earlier today. Let me just pull up that. Find it. And I label it. Yeah. Okay. So this is a perfect example of re-entry. It takes skill, right? So what do I look for when, for example, I'm shorting, right? I tried 2 different spots to short and get in at crude oil. I look for a retracement up, and I look for the momentum to start to shift, right? And that's what I do. But now the question would then become, well, doesn't that happen right here? Why don't you short there? Doesn't that happen right here, right? Why don't you short there? Doesn't that happen here? Yes, I did short that, right? Let's just call that one move, right? And then the next place it happens is there, and I did short that as well. So, how do you not take some entries and how do you take some entries? Well, that's a long, deep, multi-hour conversation around everything from momentum, speed of the tape, order flow, trade location, context, lines in the sand of context, like all those things go into which turning points we choose to interact with, or where we start to choose to interact with any turning point in momentum, right? That's kind of what I do. So first and foremost, we entered kind of a bear zone in crude. I had a zone from like 102.50s up to, I don't know, over 104. Like it's a big bear zone. So for me, it's got to do with that. I didn't like this high, right? So stop runs are another thing. You wait for excess to be put in, like market profile type terms. So anyways, let's get to your question. Re-entry. I re-enter when either we're still in my narrative, when we're still in a narrative trade location, right? Context hasn't been violated. And my intraday tools are still saying this is a condition in which you can still express this particular idea, such as a short. Sometimes one of those two things will shift. Either intraday no longer allows, because that's a filter, it no longer allows me to short, or the move is so large that context actually shifts. And obviously, if context shifts, then I don't want to be short at all. In fact, I might start stalking longs, and then you just repeat the process. So I'll re-enter as long as both of those things are holding true, and where I get a decent pullback, right? So both of these trades, we moved up and started the turn. That's where I short. We moved up, we started the turn. That's where I short. So I'm a big fan of what most people tell you is impossible or to never do or whatever, which I always laugh at or call BS on, like I do most things on Twitter or FinTwit. I pick tops for a living, my friends. That's what I do. I pick bottoms all day long. I pick tops all day long. It's a fractal nature of things. I might pick a top that's within a downtrend. Okay. I might pick a bottom that is just in such a good trade location that there's just like a micro little shift in momentum or something. I pick tops and bottoms on one time frame or another. I'm picking tops and bottoms. Why is that? It's because I consider myself a pullback trader. So by design, I'm always fading the most recent move. Most recent move is up. I'm thinking, where can I short? Most recent move is up. I'm thinking, where is the entry? Where do I short? I fade moves every single time on trades. I pick a top, I pick a bottom on my trading time frame, right? But that's within a contextual framework. If I look at, I'll look at 4 or 5 time frames, and the same trade might be a breakout on one time frame, a fade on another time frame, picking a top on another time frame. It's all fractal, right? It's different things on different time frames. So don't say that you don't pick tops, because more than likely you actually do. So as long as the conditions for the trade, both short-term intraday conditions as well as contextual conditions, remain, and order flow isn't scaring me out of the trade, my use of order flow is inversely related to the strength of the narrative. So when you get like a great DMI from me, I'm going to be less likely to let order flow scare me away from taking a trade. If it's a very ambiguous, we're not sure kind of situation, then I won't most likely trade against a very clear order flow signal that's against the idea that I might be stalking. And so reentry is also about identifying what's going on the tape as you get stopped. Not in all situations, but in many situations, stop runs are just that. They are stop runs. They're not new moves that are game changing, context changing, intraday condition changing. They're just little stop runs. Okay. And if you're going to play this game like I do, with typically tight stops and the ability to scratch pretty quickly when you don't like what you see, you cannot be successful doing that unless you master the art of the reentry. And a big part of that is what I'm talking about here. It's around identifying where it's just a wick and there's really no, again, what's the engine? What's the energy behind a move? What's inside the bars? That's order flow for me. That's market internals for others, things like that. Is something really, really wrong here? Should I hold off? Or is that just a stop run off of weak buyers, let's say, that I'm willing to hop right back in as soon as I get another momentum shift or an excess created above a high that needed it, whatever the case may be. Identify stop runs. Whether or not you're a part of them or not, the more you can identify where stops are ran, the better trader you're going to be on any time frame. And that's understanding just the nature of the game, crowds, and you can learn all that through auction market theory, right? Excess, lack of excess, that's pretty much what it's all about. And then order flow, what's under the hood here as we run stops, right? Is this a fresh move that I should be scared of? Or is this something that I should fade, right? And pick a top as I get some confirmation that the other side is now ripping it back the other way, whether that's momentum, whether that's something that's in order flow, whatever the case may be. Great question. What a rally off these lows in the S&P, huh? That's just kind of the market we're dealing with here. What a rally, right? It's awesome. We got really stagnant here. We started to put in a bit of a balance, right? Where's there any kind of like balance on this day? Let's even just look at the volume profile. Where's a decent distribution? Well, we had one early morning here. We had one here, right? As we kind of pressed into this BC period, boom, there's the crack of that little distribution, right? And then what do? We put in the day's big balance here. What does this become? Once H period can't hold back below there and take out any of those singles, that's excess. And guess what? So we were stagnant for 30 minutes, 60, 90, 120. Excess, 150, right? And guess what? The order flow went totally sideways in that area, totally sideways. So the market just, sellers dried up, right? And in this type of volatility, these are the type of bounces that are possible. Did I trade? I didn't take I don't think I took a single long in the S&P today. I scalped some, so don't hold me to that. But if I did, it was trivial and insignificant. I'm pretty much just shorted from the high end. Crude and the S&P is all I traded today. Reentry is just, as Sasikant asked, again, just to wrap that up, re-entering trades and when not to, when to is a very, very worthwhile thing to develop. What do I recommend, says Wade, for a trading journal? Is there a third-party software, just an Excel spreadsheet? So for me, journal is more like journaling, as you might think. Okay, so there are three main outside components of trading work. One is pre-market prep, one is journaling during the session, and then one is your review work. And then let's add a fourth one, which is kind of a part of the review work, which is your statistics, your trade logging. That's not journaling. So I separate those. Maybe it's a semantics here, but for journaling, I like a paper journal when I write down ideas, thoughts, feelings, errors I just made, things in real time, rationale for decisions. I like to use pen and paper. If I wasn't using pen and paper, I would use Notion, which is something I moved to a year or two ago from Evernote. For trade statistics and a trade log, I recommend what I talked about a little bit ago on the call, TraderView, TraderVue, TraderView. Great product. I've used it, worked with those guys for years and years and years as a independent retail trader, as a prop trader, as a prop desk owner. TraderView is great, simple, fantastic. I use again, paper and stuff for journaling. I use TraderView for statistics and analyzing trade logs and stuff. And then I use Notion for like prep work, review work, brainstorming, playbooking, all that kind of stuff. Oscar says, I see you use scale in, scale out execution style. What are the advantages you perceive in that approach and not, for example, all in, all out? So a little correction there, Oscar. Most of the time, my approach is all in, scale out. You may see a couple of execution dots like grouped together, but that's just me working into a kind of a full position there. for all intensive purposes, it's all in, scale out, with at times some adding. Okay, so that's maybe what you mean by scale in, because sometimes I add to trades, but it's more common for me not to add to trades than it is to do. So for most of my trades, it's all in, scale out. Why do I like that method? I think it smooths my equity curve, because I think it's almost two systems for my portfolio of trading, if you will. One system takes advantage of short-term momentum. Another, that's the scaling out, right? Taking those profits or losing on those trades, whichever. And the other is holding core positions for bigger narrative-based moves and destinations. Those are going to have a lower win percent, but obviously much more risk reward. The opposite's true for the early scale outs. Those are going to have higher win percent, lower risk reward. So I like to combine those two systems because I think it smooths out my equity curve on a month-to-month basis. Is it pure? I think as a pro trader, I see a lot of pro traders end up making some decisions that are kind of like lifestyle decisions, peace of mind decisions. And they're not emotionally driven. They're not, like a trader moving a stop to break even because they can't handle the thought of the trade turning into a loser. It's not that. That's an emotional crutch. What I'm talking about is pro level-headed decisions around, here's how I want to structure my business and the P&L of it and the volatility of it and things that I can do to manipulate that in ways that I approach my trading, versus the authorship, trading books, writers, people who only talk about profit maximization, right? That's all that's kind of discussed, is how to be the best, how to make the most. And not all decisions, I think, as a pro trader, just quite simply cut and dry come down to profit maximization. There's more to it than that. Call it a weakness, call it being smart. Different people might debate this, but I don't really care. I'm open to discussing it, but that's why I do what I do. What kind of MAE would you consider acceptable for a successful desk trader? How do you coach traders to manage a losing day? Great questions, Julian. MAE, we can't talk, everything's relative, right? So what if I said, well, I think the kind of MAE that's acceptable is, $600. $150. Like those are worthless, right? So those don't give us any reference. You want to see traders. And by the way, let's just coach this up real quick. So MFE and MAE are the terms that we're discussing here. So one is max favorable excursion and one is max adverse excursion. I realize I now made that F look like an E. Okay. And if you just took a trade, got in and then got out, it's like a line graph. There's your P&L. You made $500, right? There's no other info there, right? But let's say that we wanted to make this, rather than a line graph, let's say we wanted to make it a candlestick chart. Okay. If it's a candlestick chart, well, we know where the open and the close is. Where's the tails? Where's the high and the low? That's the MFE and MAE. You get into a trade. It goes against you. It goes in your favor. It starts to go against you again, and you exit. There's the P&L, right? Plus 500. Your max adverse excursion is here, right? Minus 100. And your max favorable excursion is here, plus 600. So we knew that this trade went 600 in your favor. It went 100 against you, and you closed it out for 500. This, my friends, is, case in point, candlesticks are better than line graphs, right? No one trades off line graphs. Robinhood people, right? we can look inside the P&L. That's what MAE, MFE data is. What if you had a trade where it was a profitable trade and it looks like this? Well, guess what? That's a problem. You drew down this much in order to make this much. That's a problem. Okay. So I don't have especially on a trade by trade basis, an MAE, MFE target or whatnot. But we will look at the statistics of traders over multiple, 20, 30 trade sample sizes and how that's evolving over time. And for each trader, it's unique. Okay. Some traders, for example, one trader that I'm working with right now, we just went over his stats again in that advanced group mentoring, the last meeting I was in. And he's got like I forget what it is, 76% win percent. That's really, really high for a trader. Okay. Especially a short-term trader. And I think he was like 1.5 to 1, like risk reward, call it MAE, MFE. So that's huge edge, but it's kind of atypical. What I look for standard NADRO traders, which are the bulk of my desk traders, I look for their MAE, MFE to be at a bare minimum 1.5, and I really want to see it over 2. Over sample size, right? Trade by trade, it's random, okay? Obviously, if there are MAE, MFE problems, and I'm talking about the ratio, right? That's max favorable excursion divided by max adverse excursion, the absolute value of both those terms. So it's looking in, you could look at average winner to average loser, right? But MAE, MFE is going to give you a little deeper insight into what's possible and where you might go to maximize some things or improve some things, right? You might have a very normal looking average loser, and then you have an atrocious max adverse excursion. Well, that just means your risk is crap, but you're getting away with it for now. Okay, so we can look inside the bar, inside the P&L. So what was the question? What kind of MAE would you consider acceptable? Again, I'm looking for 1.5 to 1 or 2 to 1 on over sample size. And how do I coach traders to manage a losing day? Losing days are inevitable. Losing days are a part of the business. Your job is to sit in your seat, be there for your best opportunities, put the appropriate amount of risk on when it's your process calls for you that opportunities at the hard right edge of the chart. And if that results in a losing day, great. That's good for you. That's good for me. That's good for Apteros. Don't care, right? That's how I coach people around losing days. Whether or not the day is a winner or a loser in terms of P&L is just a worthless piece of information. Now, obviously, if there's a trader who can't seem to have any winning days and they're all losing days, well, guess what? That's a problem, but we don't even need to know that they're losing multiple days to see that. We're going to see their statistics. We're going to see their decision making. We're going to see their lack of adhering to probably quality process, or either lack of correct process for the current market conditions. Something's wrong, right? Something doesn't match up. So one of the first things I teach people is to redefine what it means to win or lose, right? Especially for a day, right? You could talk about winning or losing on a trade, but I think a lot of like bad decisions around winning or losing on a trade have to do with your mentality around wanting to win for the day, right? People make decisions around their day's P&L. They will take a trade because of where their day's P&L is or isn't, right? You were up $2,000. Now you're only up $800. You'll just stop for the day if you can take some more trades and get the day back to plus 2,000, right? Amen. You've been there? Yes, me too, right? So it's a big deal to redefine what it means to win what it means to feel good about a trading session once it's done. And that needs to come back down to things that are within your control, and specifically day in and day out, something in particular that's within your control that we call a process goal for the session. You should be working towards doing something well. And I'll say it one more time, just because everyone still gets this wrong. Listen up, because most people get this wrong. It's got to be something that's actually within your control, something you can do. Okay. Don't just say, don't do this or do better. No, today I'm going to do X, Y, Z when it comes to managing winning trades and my process for stop placement. This is what I'm going to do. I'm going to focus on doing a really good job of this, because I've looked at my statistics and I know that this statistic is weak, and I've seen that over time. That's hampering my performance. I've talked about it. My team knows, my desk knows what I'm working on, and that's going to be the priority for today and probably the rest of this week. And then we're going to refer back to the statistics, and we're going to look at one key metric, and we're going to look for that metric to see improvement. And that's going to be feedback for me as to how good of a job I'm doing at this thing that I set out to do. All right, guys, I know we've got about 30 more questions here. And again, I'm sorry, but it's first come, first serve. And we've taken a half-hour meeting into a 45-minute meeting here today. So I do have to step away. Hope this has been helpful. Hope you learned something. I certainly have fun doing these, and we'll see y'all next week, same time. Cheers.